Hi, it's Marianne again, and I'm here right now to talk about budgets. So hopefully you have been keeping track of every cent that you spend, starting about the first week of school, which was August 17th, and we're going to do that until the middle of September. And then we're going to start putting together a budget. So what we're going to do with the data that you collected from the middle of August to the middle of September is we're going to back that all up, and we're going to call that our actual data for August, because you've got the last 2 weeks of August and the first 2 weeks of September, so that should cover about a whole month worth of your expenses. And it'll give us a good starting point for our budget. But we're going to take the last 2 weeks of August, first 2 weeks of September, we're going to back that all up and call it the August 1 to August 31 data. So that's going to form our August actual information. To relate that to the income or the cash flow statement, it would be it would look exactly like your cash flow statement from August. It's actual data. And so we take that actual data and now we start to use it to help us forecast what our expenses are going to be in the future. So I've just done a really simple budget here. I've got inflows and assumed you had $500 of wages for the month of August, and then that you got a $1,000 scholarship during the month of August. So that gives you, oops, $1,500. I can't add. Got to watch me every second. So our end result's going to look even better. So we've got $1,500 in inflows, and then we've got total outflows of $850. So actually we've got positive net cash flow here of $650. This is going to give me a little bit more flexibility here. So we've got positive net cash flow at the end of August of $650. You have some options with that. You can use that to make your balance sheet look a little better. We'll talk about that in a minute. So now we've got some August actual data, and we're going to put together a September budget. So the September budget is a forecast. A budget's always a forecast. It's forward-looking. You are estimating what your expenses will be in a coming period. So your wages, we're going to assume, are $500. You've got this scholarship, but it's a one-time deal. So that's not going to carry over into September. So we're going to put 0 there for our budget. So your actual inflows, your budgeted inflows for September are $500. When you move down into outflows, we're still going to have the $200 in rent. That's usually a reoccurring expense. Utilities, $50, food, $100. You're not going to have any expenses for books because you already bought your books the first week of class, so you would have all your books and be able to read all your assignments and do very well in school. So we're not going to have to buy books now, and you've paid your tuition. So again, September budget, those two things are 0. I've filled in September actual, just moving 1 month forward and assuming we've gone through the month of September and have some actual data. So our wages were really $500. And so we've got total inflows of $500, rent again of $200, utilities of $50. We spent more for food than we thought we would spend. We spent $125 instead of $100. And actually, we did have one book that we found out we had to purchase after the school year had started. So we spent $50 on a book. That means that our total outflows are $425. And our net cash flow is $75. We anticipated we would have a net positive cash flow of $150, but it's actually only $75. So this column right here is where we keep track of the variances from our budget to our actual data. So we budgeted these things for September in this column. Here's our actual information for September. And for food, we spent $25 more than we thought. And for books, we spent $50 more. So that ends up with, on the positive side, we spent more than what we thought we were going to spend by $75 for total outflows, which ends up leaving us with $75 less in net cash flow than we thought we would have. But we're still in positive territory, so that's good. And we can always go back and figure out, why did we spend $25 more on food than we normally do? And maybe what you did was, instead of, making your lunch or bringing something from home to eat. You went to the cafeteria and bought food there, or you stopped on the way to school and you were buying breakfast or lunch at a fast food restaurant. When you're keeping track of all the spending that you do in the month of August, that last 2 weeks of August, first 2 weeks of September, what you're going to do is keep track of everything just day by day. And then what I'm going to ask you to do is categorize it in a way that is meaningful to you. So what I find out, or what I found out over years of teaching this course, is that the guys tend to have a lot of spending in fast food. And they just didn't realize that they were spending that much on fast food, and usually they try to get a handle on it. For the women, it varies. The category that they overspend in varies, but a lot of times it's clothes or shoes or things like that. Guys will also buy video games and things like that. So you've got to figure out the categories that are meaningful for you, and those categories will change over time as you progress through life. When I first assigned this way back, 15, 20 years ago, it was about 15 years ago, I did this assignment with my students because I hadn't done it for a while. And what I found out was that I was spending $200 a month on Starbucks, which is ridiculous. That's $2,400 a year at Starbucks. And so if you have been paying attention to the time value of money that we just worked on, you know that $200 a month deposited into a mutual fund at 10% for 45 years. If you're 20 years old and you're going to retire at 65, that $200 a month for 45 years at 10% ends up being worth $2,096,000. So $200 is a lot of money to waste. What I did, because I have to have a triple grande soy latte every morning, is I went out and bought a little barista machine for $150 that makes the espresso. And then I buy a pound of coffee, a pound of espresso beans about every 2 weeks. That's about $15. And the milk is probably about $30 a month. So I'm spending $60 a month on the coffee and the milk instead of $200. So now I can take that $140 and do whatever I want with it. So I get to have everything that I want. I still get my triple grande latte every morning, and I've got $140 that I can now invest in a mutual fund, or I can save it to do the traveling that I love to do, or whatever I want to do. That's money I've just freed up from my budget. So if you notice in your budget that you're spending too much, or when you analyze your expenses, your spending, if you notice that you're spending too much in certain categories, figure out how you can decrease that spending in a reasonable way. Because you won't budget, you won't watch your spending unless it makes sense to you. So figure out what you can give up so that you can achieve your goals more quickly. So back to this $650 in positive net cash flow that we had in August, you've got some choices with that. We've got credit card debt on this balance sheet of $600. That positive net cash flow of $650 will wipe away this credit card debt. And you're probably paying somewhere around 20 to 30% interest annually on the balance that you carry on your credit card. So it's very, very expensive. Think about this. If you've got $1,000 in your savings account, that's probably earning 1/2 of 1%. If you've got a $600 credit card balance at 25% interest annually, you're losing 24.5% a year because you're getting 0.5% on your savings, you're paying 25% on your credit card balance. So what you should have done anyway was take this savings, pay off your credit card, watch your spending so you don't get a balance again, and then positive net cash flow can continue to go into savings. We will talk about a company called Acorns. We'll talk about that throughout the semester, but I want to just introduce you to Acorns because you can get started right now. You can Google Acorns. It's an investment company for people that have just small amounts to invest. It works very much like the Bank of America Rounding Up program, except that you get to invest in mutual funds. So take a look at Acorns. I will put some more information online for you. But what I want everyone to do is start an Acorns account. You don't have to link your credit cards or your ATM cards to it yet, unless you want to. But over the semester, I've had students acquire or amass several $100s into the low thousands in investment that they've made in Acorns mutual funds. And these mutual funds are open to anybody who has $5. They will take a $5 investment to start your account. So look that up and think about your spending in the month of August and halfway through August to September, that 4-week period, and then start to think about your budget. So hope you enjoyed this. I hope it helps you keep track of your expenses, pay down your debt, and start building net worth. Thanks.